today's financial market update, the most important market insights and investment ideas you need to know. Market sentiment is bullish mode. Market is performing well across major indices. Index performance: S&P 500 at plus 1.01%, Dow Jones at plus 0.83%, NASDAQ at plus 1.12%, Russell 2000 at plus 0.94%. The S&P 500 experienced a significant decline as market sentiment turned cautious amidst rising global tensions and economic instability concerns. The decline in the S&P 500 reflects heightened investor anxiety over geopolitical risks, which could lead to increased market volatility in the near term. Consider allocating a portion of your portfolio to biotech stocks like BIF, which exhibit strong growth potential following positive clinical outcomes. U.S. oil prices have dipped below $100 a barrel, signaling potential relief for inflationary pressures. The decline in oil prices could ease inflation expectations, but volatility remains, warranting close monitoring by investors. Consider investing in energy companies poised to benefit from fluctuating oil prices, as they may offer potential for growth. EOG Resources reported quarterly earnings of $1 to $2 per share, significantly surpassing analyst expectations. The strong performance from EOG Resources indicates resilience in the energy sector, suggesting potential for continued investment and growth. Consider increasing positions in EOG Resources and related energy stocks, as robust earnings suggest strong growth prospects. The S&P 500 has recorded its first 3-week losing streak in nearly a year, indicating potential market volatility. The S&P 500's downturn signals a shift in market sentiment, potentially leading to cautious investment strategies amid rising inflation concerns. Consider positioning in resilient financial institutions like Goldman Sachs and Wells Fargo, which may weather economic fluctuations better than others. The effective federal funds rate decreased from 4.33% to 3.64% over the past year, marking a significant shift. A declining effective federal funds rate suggests the Fed is prioritizing economic support, which may enhance stock market valuations. Consider increasing exposure to sectors that benefit from lower interest rates, such as real estate and utilities, which tend to thrive in this environment. The S&P 500 has entered a 3-week losing streak, marking its longest decline in nearly a year. A declining S&P 500 reflects rising investor uncertainty, often signaling a potential slowdown in economic activity and market sentiment. Consider diversifying your portfolio to hedge against volatility, focusing on sectors historically resilient during economic downturns. Oil prices are experiencing high volatility, with projections indicating they could reach $200 a barrel amid geopolitical tensions. The increase in oil prices could lead to higher transportation and production costs, challenging many industries and potentially squeezing profit margins. Consider adding Mondelez International to your portfolio, as its anticipated growth aligns with favorable market conditions for food products. The Indian rupee is projected to experience increased volatility through March amid ongoing geopolitical tensions. The heightened volatility in the rupee suggests investors should closely monitor geopolitical developments, as they can significantly sway currency valuations. Consider diversifying currency holdings to hedge against potential volatility in emerging markets, particularly the rupee. Tensions in West Asia are rising, with the Strait of Hormuz seeing increased military presence, notably from the U.S. The escalation in military activity around the Strait of Hormuz signals potential supply chain disruptions, prompting investors to reassess risk exposure in energy markets. Consider investing in energy ETFs that focus on companies operating in the Middle East to capitalize on potential price fluctuations. U.S. oil prices have fallen below $100 a barrel, indicating potential market volatility and prompting concerns about government intervention. The drop in oil prices could signal a broader economic slowdown, prompting investors to reassess their exposure to energy stocks. Consider diversifying portfolios by increasing allocations to solar energy stocks like Sunrun, which are showing resilience despite market fluctuations. China's economic landscape is increasingly intertwined with global supply chains, affecting various sectors and industries. The reliance on Indian manufacturing for U.S. drugs signals potential vulnerabilities in supply chain stability, which could impact pricing and availability. Consider investing in pharmaceutical companies that diversify their supply chains to mitigate risks associated with geopolitical tensions. Bond prices have dropped significantly as the 10-year Treasury yield reached a high of 4.5% in recent weeks. The increase in bond yields signals a shift in investor sentiment, emphasizing the need for caution in long-term bond investments. Consider reallocating to short-term bond funds or ETFs to mitigate interest rate risk while still earning interest income. A Senate bill proposes banning institutional investors from purchasing single-family homes for rental purposes to enhance housing affordability. If the bill fails to close identified loopholes, institutional investors may continue to dominate the single-family rental market, hindering affordability efforts. Consider diversifying your portfolio by investing in real estate sectors less affected by institutional buyer activity, such as multifamily units or commercial properties. Apple is acquiring Motion VFX to enhance its creator tools, signaling a focus on content creation innovation. Apple's acquisition suggests a strategic move to strengthen its ecosystem, potentially attracting more users and increasing revenue streams in the creator economy. Consider investing in Apple, as its acquisition may provide competitive advantages and long-term growth opportunities in the rapidly evolving tech landscape. Cisco has expanded its secure AI factory in collaboration with NVIDIA, enhancing security measures for AI deployments across industries. The collaboration between tech giants signifies a strong focus on secure AI deployment, indicating rising demand for robust technology solutions in the market. Consider investing in firms like Cisco and NVIDIA, as their collaborations position them as leaders in the secure AI deployment market. The crypto market has experienced no significant news impacting prices or trends in the past 5 days. The lack of news in the crypto sector suggests a period of stability, but it may also indicate investor apathy. Consider diversifying your portfolio by allocating a small percentage to stablecoins to hedge against volatility. Sunrun Inc. shares surged 8.5%, reaching 13.11, signaling strong interest in renewable energy investments. The uptick in Sunrun's stock price suggests that investors are regaining confidence in the residential solar market despite ongoing uncertainties. Consider diversifying your portfolio to include solar companies like Sunrun, balancing potential rewards with inherent market risks. Thank you for watching. FERPA, your financial Sherpa.